We've all heard it since we were kids. Save your money. It's one of the most common pieces of financial advice passed down through generations, and for a long time, it made sense. Work hard, put some money away, don't spend too much, and eventually you'll be financially secure. But here's the problem: that advice was built for a world that doesn't exist anymore. In today's economy, saving money is no longer the safe move it once was. In fact, it might just be one of the most dangerous financial habits you can have. Let's talk about why. First, let's look at what your savings account is actually doing. Most traditional savings accounts offer you an annual interest rate of about 1%, if you're lucky. Some high-yield online savings accounts might offer a little more, but even the best ones barely reach 4%. Now let's talk about inflation. Inflation is the rate at which the cost of goods and services increases over time. In recent years, inflation has averaged anywhere from 3% to over 8%, depending on where you live and the state of the economy. That means if you're earning 1–2% on your savings, but inflation is rising at 6%, your money is effectively losing value every single year. In simple terms, the longer your money sits in a savings account, the less purchasing power it has. What used to buy a full grocery cart might now buy just a few bags. What used to cover rent might not even pay for utilities anymore. So while it might feel good to see your bank balance slowly ticking up, in reality, you're quietly bleeding money. Now, let's be clear, saving money isn't entirely useless. It has its place. You should absolutely have an emergency fund. You need cash on hand for unexpected expenses, car repairs, medical bills, or even job loss. That's what savings are for: stability, not growth. But if you're using saving as your primary strategy for building wealth, you're playing a losing game. So what are the wealthy doing differently? They invest. They put their money into assets that grow over time: stocks, real estate, businesses, even digital assets like cryptocurrency. These assets don't just protect against inflation, they often outpace it. Historically, the stock market has averaged returns of around 7–10% annually, even after inflation. Real estate, with rental income and property appreciation, it's another solid way to build long-term wealth. The point is this: wealth isn't built by storing money, it's built by putting money to work. When you invest, your money earns more money. That's the power of compound growth. It's how a $5,000 investment today can become $50,000 over time, not by sitting in a bank, but by being active in the market. Now, here's something else to think about. The system is designed to reward those who take calculated risks and punish those who play it safe. Banks take your savings and lend it out at much higher interest rates. They use your money to make money and give you the smallest piece of the pie. Meanwhile, people who own assets, whether it's a portfolio of stocks or a rental property, see their wealth increase as asset values rise. And guess what rises in value over time? Not cash. Assets. Let's not forget taxes. The money you earn from your job is taxed heavily, but long-term capital gains from investments, often taxed at a much lower rate. The system even favors investment income over labor income. So while you're grinding to save every penny, the wealthy are leveraging their money, reducing their taxes, and watching their net worth multiply. And it's not because they work harder, it's because they think differently. So if you're still living by the old rule book of save, 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 it might be time to upgrade your strategy. Learn about investing. Start small if you need to. Open a brokerage account. Look into index funds, ETFs, real estate, or whatever fits your goals and risk level. Because here's the truth: saving is safe, but in this economy, safe can be deadly to your financial future. Don't just protect your money, grow it. The earlier you start, the more time you give your money to grow, and the less likely you'll be stuck in the cycle of saving just to survive. Instead of building a life where money works for you, saving is not the enemy, but stopping there is. Make your money work, because if you don't, inflation will.